Bitcoin is acting as if we were in control of it. It's getting near that technical area we've been obsessing about since 60,000, and an all-in re-entry is now next in line. Here's exactly what I expect in the upcoming week, together with my game plan disclosed in full. Bitcoin's doing what we've long anticipated, and anyone who follows this channel knows we've been talking about a plunge down to the $42,000 to $45,000 area, and we are on good way towards that. For a full disclosure of how we got to these numbers and why a plunge has been in the cards for some time now, I suggest you watch the 2021 Bitcoin series playlist on this channel. It'll let you in on everything you need to know, and we continuously keep adding technical analysis and knowledge onto that very playlist. In this episode, we'll discuss why Bitcoin will not dip below 40,000 and why the $42,000 to $45,000 area will be the ideal spot to re-enter with my all-in. We will also discuss my game plan, as in how I intend to play this from now on. But first, nothing in this episode is financial advice. Everything I say is my own opinions only. You must do your own due diligence prior to any investments. You alone are responsible for your investment decisions. And if you appreciate this episode, then please hit the like and subscribe buttons and share this episode with others who may be lost in the woods due to all of the disinformation out there. Let's now move on to the good stuff. I don't quite get why some technicians believe we might be going down below 40,000. Perhaps they see something I don't, and in such case I stand corrected. But whenever I hear their arguments, they're anything but convincing or logical to me. Instead, they rather come across as shallow and a bit hasty. For I get the feeling they apply isolated and generic technicals rather than a complete and holistic approach that is based on Bitcoin's unique characteristics. For these arguments rather go against any sound Bitcoin adapted market cycle theory, in my opinion. And to be perfectly clear, I'm not criticizing or scolding anyone here. My point is that technical analysis is complex in its very nature. For part of the reason why I'm here is to rewire traders into a correct way of thinking. For just because someone makes an analysis doesn't automatically make it correct. For most technical analysis out there is based on noise, not signals, and this is also why the majority of technicians lose money in the long run. A lot of money, never forget that. For just because all the knowledge and tools are openly available to become a great painter doesn't mean that anyone who takes up painting will become a Van Gogh. Here are my reasons why we won't go below 40,000 and why Bitcoin will probably not pass below 42,000 either. Let's speed things up a bit. First of all, Bitcoin's markups have a 12-year-long history of having very strong momentum. They have never taken out a previous pivot top, with the only exception of a wick kiss that we've spotted on a single occasion. Secondly, as we've discussed in detail on this channel already, in this 2021 Bitcoin series to be precise, whenever Bitcoin breaches the EMA ribbons, and sometimes green Ichimoku too, during a markup, it is always a mini market capitulation that is immediately recovered as a V-shape. Those are the ideal buying spots, and I will ship everything I have back in upon such occurrence, and such occurrence is very much in play. And thirdly, a break below 42,000 would bring us all the way back to the 8th of January. That'd be 3.5 months of stagnation, and I just don't buy that. There'll be plenty of buying pressure right above that level, as anyone who missed out on the journey there will now be mercifully given a golden spot to get right back in again. There's just too much momentum in Bitcoin to breach this without a serious fight. All I'm saying is this: don't count on Bitcoin taking out the $42,000 level, and especially not seeing the 30k range anytime soon. The monthly RSI that I keep going on about has already reset nicely and is, by the time of producing this, at around 77. This is perfectly fine with me, although I still think it may have some more downside to go. And the reason why I say this is because I do not expect a steep recovery just yet. I think we might be in for at least another few days or even a week or two of 40k range volatility before proceeding with a fast recovery. But why is that? Well, there are two reasons for this. First of all, an April recovery into the 50,000 would defeat the entire purpose of a cooling off. Sure, it could bottom out in May, but then we'd need a red monthly closing for it to have any technical effect at all. And that on its own would leave Bitcoin range-bound for 5 months, and that's way too much and way too long for a Bitcoin markup. It defeats any typical characteristics thereof. And secondly, Bitcoin has a lot of technical resistance above. I just don't think it has the momentum to push above them until the price has flung around with volatility and uncertainty within the low to mid $40,000 range. With that said, I expect Bitcoin to end this month in the 40k range. If it finishes in the $42,000 to $45,000 range, then I will ladder in my all-in immediately. If it finishes the month in the 46 to 50k range, however, and without having tested the 42 to 45k area, if only so with a humble little wick, I expect an early May drop down to those levels before taking off fast. So how, when, and what will I buy? Thank you for asking. As discussed in the previous episode, Ethereum has rapidly closed in on its technical resistance. It might have a little more to go, but after that I see it reacting in either of two ways. Either it plunges down, upon which it loses power and momentum versus that of Bitcoin, or it consolidates in preparation for a higher move. Either would make sense, and as I don't base my decisions on lofty guesses but on statistics and odds, I will scale everything into Bitcoin right away. But if Ethereum were to creep above the key horizontal resistance at 0.053, I will scale heavily into Ethereum, as it will likely amount to a little parabolic move. And the reason for this is because there are no real resistances until the 0.085 level, and any such break can therefore move fast. This would make sense on many levels, however I doubt it's in the cards yet, and therefore I will not commit to it until it's confirmed. And my theory behind this is that Ethereum has rallied lately whilst Bitcoin has been range bound. This strongly favors a move for Bitcoin and at the expense of Ethereum. I'd go as far as to say that this has an 80% chance of happening, especially since ETH versus BTC now also has a 3-point RSI divergence on the weekly for a strained high likelihood pullback. My theory is that Bitcoin will rally whilst Ethereum will establish a big continuation formation as discussed in the previous episode, but with the difference that this would be a bullish formation or range on the bigger time frames as opposed to the 1 and 4 hour charts as discussed previously. In this sense, I'd expect Ethereum to form a big bullish continuation pattern, and once it retests either the bottom of the ascending channel or, more likely, the key support at 0.036, an Ethereum formation breakout will be mature. In this scenario, we're talking several weeks into the future. So what then about Marathon? First of all, as most of my Bitcoin and Ethereum holdings are in the shape of ETNs, as in derivatives backed up roughly 1-to-1, I'm at the mercy of the market's opening hours. In this sense, I will scale in everything at around 45 to 46,000, depending on how and when it were to occur. For example, if Bitcoin were to be trading at 46,000 1 hour prior to Friday's closing, I'll happily settle with that. By the same token, if Bitcoin were to not have broken below $50,000 already, but rather in a week's time from now, and mind you, this is just a hypothetical example to prove a point, as in the very last days of April, then I would have settled with 48,000 to re-enter my all-in. For you see, timing is just as important as price action here. But, and here's where the strategy becomes truly beautiful, or shall we rather say waterproof. Upon re-entering my all-in position into Bitcoin, I will keep a very close eye on Marathon. And upon any dip position towards 42 to 44,000, I will scale in a base position of 15%, and upon any lower bullish red closing at any time, I will double down on it. Such signal would on its own be an indication that a steep move up is in the cards, or a second leg of a V-shaped recovery. That was all for now, thank you and goodbye.